This is Rovin Remax. Remax Crossroads First Realty 3. I'm Linda Montgomery, and I'm roving around North Texas, highlighting all the people, places, and things that make this a great place to live and invest in real estate. Our guest expert today is John Allen with Community Insurance Advisors. John, when buyers are thinking about the insurance that they're going to select for their new home, is it smart to really concentrate on just the deductible, or what are some other factors that they could consider before selecting the right policy for them?
So on the deductible theme, typically the homeowner policies here in Texas come with a 1% deductible. That tends to be sort of the optimal point of premium cost and what do I get for it. But we have cases where people want a higher deductible. And how do you think about whether or not that higher deductible makes sense? Let's go back to the example of the $300,000 house with 1% deductibles. What that means is that if you have a claim, you're out of pocket the first $3,000. If you have a 2% deductible, that means you're out of pocket $6,000. And let's then say that the difference in premium is $500 for the sake of discussion, okay? So the 2% deductible policy would be $500 less than the 1% deductible policy. Probably not real numbers, but let's use that for example. Well, if that's the case, the 2% deductible means you're out of pocket $3,000 more than the 1% deductible. And at the same time, you're saving $500 a year. So how many years do you have to save $500 to make up for the $3,000 you're out of pocket? Well, the answer in this case is 6 years. So the bet then becomes, are you comfortable that you're going to go more than 6 years between claims? And if you're comfortable with that, then you should probably take the higher deductible. That, and can you handle a $6,000 out-of-pocket experience if you have one?
Right. So it is a very personal choice on the part of the homeowner, what he's going to do.
That's right, because insurance is by definition, it's a wager. So it's a function of your comfort level with, how do you feel about insurance? If you're using it only for catastrophic coverage, I'd be inclined to take the higher deductible. If you're going to use it to cover stuff that's just above, then probably take the lower deductible.
So that really will depend on the homeowner's approach to everything.
That's
there.
Right.
That makes very good sense. If a property has something extra, such as separate quarters, a barn, or other things like that, how is that taken into account with an insurance policy?
Typically, those are covered under a line item called other structures. Most homeowners policies automatically include 10% of the dwelling coverage for other structures. $300,000 coverage, $30,000 in other structures. What does it cover? It covers your fence and any other permanent buildings that are not attached to the main building. So if you have a barn, if you have a secondary house, say a fixed up garage, for example, with an apartment, you need to figure out how much it would cost to replace that and then make sure that that other structures component includes enough coverage to cover that building that's not the house.
Very good. And that's pretty common in North Texas, where there is an outbuilding, a workshop, a quarters, or something like that. So
right.
Homeowners need to take that into consideration. How do you determine the cost for and the coverage for insuring the contents, the interiors? I mean, what do you tell people to do? Take pictures, or how do you assess that value?
We recommend that you take pictures. Most people don't, but we recommend that you have some means of verifying what it is that you have in the house. Generally speaking, homeowners policies come with some percentage of the total dwelling will then be assigned to the personal property, is what it's called, and so or contents. That might be 50% of the dwelling or 60%. Typically, that's enough. But most policies come with a thing called a sublimit on certain items, such as jewelry or gun collections. And then, if you have items that exceed that sub limit, or if you have value in those items, what you want to do is you want to get an endorsement that then gives you the specified dollar amount of coverage, and it removes the deductible from that endorsement, so you actually get paid for having the loss as opposed to having a huge deductible and end up not getting anything.
I'm glad you mentioned those two things because they come to mind. That would be a gun collection,
right,
or really expensive jewelry. I mean, do they have to go get an appraisal for the jewelry? How do they get an independent assessment of the value so it can be covered properly?
Insurance companies generally ask you for an appraisal every 3 years. Some people don't do that either, but as long as you have the appraisal, then that's what you can use as the basis for the coverage.
All right. One last question today. When a house appreciates, and we know that homes in North Texas have appreciated quite a lot, do they need to reevaluate with their insurance expert what the house is insured for and change something?
That's a good question, and a lot of people ask that. Remember that you're insuring the dwelling and the cost to replace the dwelling. The question you just asked is the home is appreciating, and that's a market question, right? It might be a tax roll question, but it's generally a market question. Insurance companies are covering the building, they're not covering the land and the market value of the
Right.
building.
Mhm.
The one possible exception is if you have a mortgage on the house and for some reason the mortgage is more than the replacement of the house, then maybe you have to do that. But generally speaking, as long as you've got enough insurance to cover the actual building itself, it doesn't matter how much the land and the market appreciates, you're still covered.
Then, continuing that thought, what about the accelerating cost of materials for replacement costs? How would that be figured in?
If you're concerned about that, the way we hedge it is we put an endorsement called an additional replacement cost endorsement on, which gives you a little bit of hedge in there. But if you're really concerned about that, let's say you did a bathroom upgrade or a kitchen upgrade and you add some value to the house, you can bump up the amount of dwelling coverage. It's not going to make a huge difference in your premium, but if you're concerned about it, it's a good idea to relook at that.
Excellent. Of course, every situation is different, and we hope that you will consult your own insurance expert.